All right. Okay. Welcome, everyone. My name is Jesse Knudsen. I'm head of operations at Bitfinex Securities. What we're talking about today is the Blockstream Mining Note, which I think, from my perspective, I think it's a pioneering product really in the security token space. I think one of the most successful STOs to date. I mean, in terms of raising almost $50 million, 8 successful tranches, and then being properly tokenized, meaning that investors can withdraw, they can self-custody that, they can trade it peer-to-peer. All of this, I think, makes it fairly unique. And then on top of that, it's now kind of gone through its full life cycle of 3 years to maturity, which is pretty wild. I mean, announced in, I guess, the first quarter of 21, and then started mining in July of 21. So time flies so quickly. Outside of that, we'll also be talking about the impact of the BMN on the Liquid network ecosystem, and then what comes next. So we're really lucky today to have a number of participants in both the BMN and then the broader Liquid ecosystem. So we've got participants today from Blockstream, from Stalker, from Digital, and from SideSwap. So jumping into it, maybe we should start with introductions. Maybe we can go around and everyone can let us know, what your company does, and then how you guys are currently working with Liquid as a federation member. So maybe we can start with James from Blockstream Mining. Is James able to speak?
Sorry about that, Jesse. Yeah, no, thank you for the introduction, Jesse. Yeah, it's James Macedonio from Blockstream. I'm the Senior Vice President, Global Head of Sales and Business Development. Prior coming to Blockstream, I spent 6 years at AWS. And Blockstream is the technical provider behind Liquid and developed the open source software Liquid is built on, which is called Elements. We maintain a Liquid network day to day alongside the functionary operators. Blockstream also works closely with the Liquid Technology Board to develop a technical roadmap for Liquid based on the needs of Liquid members. The tech board advises us on what new features are needed, and we implement them. That's how we really participate in the federation.
Got it. I mean, moving on to Stalker, do you want to, Arnab, you or Tobias want to jump on?
Yeah, I can give a quick start, then Tobias can take over, and Jonas. Hey everyone, this is Arnab Naskar. I am the co-CEO of Stalker, also one of the co-founder. Stalker is an asset tokenization platform. We are exclusively at the moment supporting Liquid network. Our primary thesis is if Bitcoin is a sound money, why not capital markets can be built on top of it? And Stalker provides end-to-end asset tokenization services to any kind of asset issuers. Once they are tokenized, this can be issued on the platform. So the primary offering of those securities in tokenized format happens on the Stalker and also the lifecycle management. We do not provide secondary trading venues. So for secondary trading, some of our assets are listed on SideSwap, one definitely for this BMN one on the Bitfinex Securities and Merge and likes of that. And Stalker is also the primary issuer for this offering that we're talking about, BMN1, as well as the BMN2 that has been launched today. So looking forward to having this conversation with everyone. Thanks.
Great.
Yeah,
Thanks,
make it very quick. I'm Tobias. I'm also co-founder of Stalker. Arnab explained a little bit what we were doing. I'm mainly involved in the structuring of the Blockstream Mining Note from a corporate and legal perspective here in Luxembourg, and we have chosen Luxembourg jurisdiction because it's catering the most flexibility for actually securitizing and then tokenizing hash rates. And I think it's a great product out of Luxembourg, and that's what I'm mainly in charge here. I'm also in this call. I can explain a little bit more if anybody has any questions how this works.
Great, thanks, Tobias. James, can you talk a little bit what you guys are doing at Digital and what you're doing with Liquid?
Sure, I can introduce a bit of what we're doing, and then Konstantinos, our counsel, can also speak to a lot of our compliant activities and how we're implementing with global Bitcoin markets. Actually, Konstantinos, do you want to lead it off?
Yeah, let me kickstart this. So I'm Konstantinos Darlas, based in Athens, Greece, and I work for Digital as a sponsor advisor and legal counsel. Digital is a company that connects the world's best assets with global investors through a network of digital securities exchanges, allowing issuers to quickly access the world's capital at a fraction of the cost, and providing investors with exciting investment opportunities, such as BMN1. We can help list any asset, be it a stock, bond, fund from an issuer anywhere in the world, making that investment available to any investor type, retail, accredited, located anywhere in the world. Just to keep it short, we do that through our digital platform, which is an end-to-end capital markets investor technology. It allows us to do digital security issuance, whitelisting on private transfers, cap table management. It gives access to investor dashboards. It allows us to launch private fundraisers, KYC investors, and this series of things. And we do all of that primarily through the connection we have with Merge Exchange. And we help issuers issue the products on Merge, which allows trading to happen 20 hours a day, 5 days a week, and it soon will be moving to 24/7. And with that quick introduction, James, do you want to take over?
Sure. I don't have too much to add. That's the high level view. I'd say the way that we've integrated with Liquid and specifically AMP is we built our backend, our issuance platform on GDK. We provide custody services for BMN for any liquid asset, and for LBTC for our customers. And we've integrated Liquid across our platform and with all of our partners, such that and we're looking to further integrate Liquid across our partner ecosystem, and for the reasons why many of us already have, to increase efficiencies. And with the rollover of BMN1 to BMN2, we're really excited to continue digging deeper into Liquid and seeing how the next tranche comes about. So I look forward to hearing more today.
Very good. Scott, can you give an intro to yourself and SideSwap?
Hi, everyone. So my name is Scott Miller. I'm one of the founders of SideSwap. We're building effectively the matching technology as well as the custody technology so that everyone can self-custody their own securities and trade them in a manner where you don't need to rely on centralized securities depositories or exchanges to custody your assets. So we built, I think, what's probably the only implementation of having swaps available to trade AMP assets, so that two users can post bids and offers or have resting orders in the order book and trade with each other, where the settlement is delivery versus payment in real time directly between the counterparts to the trade without any intermediary between themselves. So if there's anyone who wants to look and have a deeper discussion at that later, we're always available. Thanks.
Very good. Thanks, Scott. So jumping into it, maybe we can do a quick overview of the BMN. James, can you kind of give us an introduction and an overview of the BMN, and then what were the motivations behind creating a product like this?
Well, the motivations really were to make mining simple, right? And also increase the participation of the security of the Bitcoin network. Right? That's it. Today it's complicated for institutions and individuals to engage in Bitcoin mining because existing solutions are risky and present large barriers to entry. So the BMN really makes it simple to mine without the hassle, right? By eliminating the need of deploying mining infrastructure or having to deal with long lead times and price volatility, procuring any infrastructure or ASICs, and not having to deal with unreliable providers or locked in contracts. A hash rate backed token will allow investors to avoid all that complexity. And the BMN2 will enable you to hit the ground running with a fungible token that can be tradable on secondary markets. Right?
Yeah, and it's also kind of an interesting way to get pure exposure to Bitcoin mining. You strip out all the other stuff where, some of the listed miners might be mining other coins or doing other things like AI or things like that. And I think that the BMN is one of its kind of unique kind of selling points is that it's a pure play on Bitcoin mining.
Exactly. Yes.
So can you talk a little bit more about block? Oh, go ahead. Adam.
Yeah, this is Adam. I was going to say one of the early impetus for us to explore offering the BMN1 was James, who was speaking just now, heads up institutional sales. So we are, providing co-location basically to Fidelity and other large funds. And a minimum ticket size on that is large, right? Because they're custom negotiated multi-year contracts and that kind of thing. And we got a lot of, people in the ecosystem knew that Blockstream was providing this kind of service, and they contact us all the time and ask, can you host my miners? Can you do this? And, there are companies that do, will provide service for 1 miner or 10 miners, but it's, it creates a problem for the user because, if they've got 10 miners and one of them is failed, they've got to wait for it to come back. So we figured, well, we can maybe treat all of the interest for that as a unified contract, like an institutional hosting contract, and securitize it. So they get the kind of, if 1 miner out of 5,000 is down, that's a small percentage, right? So it sort of socializes the reliability. And we also provided a 10% equipment failure buffer in there in a BMN1 and a BMN2 so that people don't experience these kind of like small outages. And then you get the transferability and the tradability on secondary markets that was mentioned. So that was sort of is down to organic demand initially, but it's very interesting security token or real world asset, which is typically real world assets are early stage startup stock, small business stock, and things like that. Whereas the BMN is it's something Bitcoin correlated and interesting to Bitcoin investors, where not everybody is necessarily.
I think I'm not sure what happened there. Yeah, and I guess another thing too is another reason was stripping out the volatility from Bitcoin, right? Because I think the original pitch was that you invest with US dollars, you get most of the Bitcoin upside, and then you get a lower volatility of returns. So it was a way to get most of the upside of Bitcoin without a lot of the volatility.
Right, that was what actually the impetus was for that, which is as well as providing institutional hosting, Blockstream at times has been mining for itself, i.e. prop mining, and we in-house experienced this phenomena where we mined some Bitcoin using machines that the company owns and made a dollar basis return, like we made a positive return over a multi-year period where when we looked at it afterwards, we could see that if we'd bought Bitcoin at the beginning, we'd have lost money, and yet we made money in dollar terms by mining. Loosely, that's because if the Bitcoin price goes through a big bear market, this was some years ago, you mine more Bitcoin than you expect because the hash rate falls, and that turned out to more than compensate for the price fall. So we actually made a dollar profit in a period where we would have made a Bitcoin loss if we just bought Bitcoin. And so that set us about, the process of backtesting that across all, across years and years of 36-month periods for the BMN1, and saw exactly the effects that you mentioned there, Jesse, which is, about 60% upside participation, but about half the z-scores are like a kind of volatility metric. So it has a kind of more stabilized return, and it's less sensitive to picking the perfect moment for an entry price. So it's kind of interesting. We've heard some people considering investing in BMN2 looking at it as a US dollar basis of a portfolio, like a fund manager or an individual, which provides a US dollar return to sort of complement a Bitcoin return. So, as we've said in some of the materials, at Blockstream, we're interested to decentralize mining, and we think that people who have a Bitcoin position should take an active interest in doing a bit like proportional small amount of mining in order to kind of secure and decentralize the Bitcoin that they own, right? So if everybody does that, then the mining becomes more decentralized.
Yeah, exactly. And can you, either Adam yourself or James, can you give an update on Blockstream's mining operations and the status of things on the mining side at the moment?
I'll let James take that.
Sure. Yeah. Thanks, Adam. Yeah. Blockstream has a long history of integrity and expertise in the Bitcoin industry. Our mining hosting services have been powering institutions since 2016. Our Blockstream Mining Note is a product of that of the Blockstream Mining division itself. Our North American facilities, we have about 280 megawatts of capacity. We have on-site security guards 24/7. We have two-factor physical access control and 4K camera coverage. We serve the institution-grade customers with the likes of Fidelity and Foundry. Our customers sleep well at night knowing their investment is protected and managed properly.
Great. And so maybe we can dig into some of the financials. So Stalker, Arnab, or Tobias, you guys had a pretty good report out on the BMN, and you covered some of the financial results of the BMN. Do you want to talk about that a little bit? I think Adam just alluded to some of that. Can you give a little bit more color on how BM1 actually performed on a dollar and on a Bitcoin basis?
I think Jonas is the best person because he drafted the document.
Yeah, it was a good report. Yes.
Yes, go ahead.
Happy to jump in. Yes, actually, it's quite nice. Like looking back 3 years from now and having all the data available, so we could make some nice analysis and compare the return of BMN1 to different Bitcoin alternative plays and also just spot BTC. But maybe just to set the stage, I want to throw the figure out there that BMN1 has actually mined, because it's quite substantial. The 1,242 Bitcoin gross mined, with some expenses of around 30 Bitcoin. So the accounting closed yesterday, and we will distribute 1,212 Bitcoin to the BMN1 investors, which is around 7.75 BTC per BMN1. And this brings the average return of BMN1 actually to around 57% over the 3 years, which is a cash-on-cash return. But as BMN1 was issued through different series over some months from July 2021 to February 2022, there are quite some different returns when you look in the tranche basis. So, for example, you can see for tranches 1 and like Series 1 and Series 2 of BMN1, there were quite some returns of around 103% actually, cash on cash, while other series that were issued at a higher note price, they have around a return of 27 to 40%. So on average, we come to this figure of 57%, which on average also outperformed Bitcoin at the time, because we have to consider that when BMN1 launched, we were at the past bull market high, and we had some average Bitcoin prices of around 55,000 euros at that time when investors bought. So quite some good returns for the holders of BMN1, especially also if you consider the Bitcoin and Bitcoin return. You made a very good point before that BMN1 is really a clean play on the Bitcoin mined, and you're not getting any involvement from some Bitcoin miners with their treasury management strategies or capital structures that in the end impact the financial returns of investors seeking for some mining exposure.
Yeah, you mentioned that it mined in total 1,200 Bitcoins. I think that's really interesting because if you look at the amount of Bitcoin on the Liquid network right now, and then you add that 1,200, it puts the Liquid network very close to the Lightning network. So Liquid becomes very close to becoming the largest second layer on Bitcoin, which I think is pretty cool. Jonas, you also mentioned about kind of how the first couple of tranches outperformed the other tranches, and I think that was an interesting kind of macro environment at the time when the BM1 launched. And there was, it was 2021, there was COVID, There was the global semiconductor crunch. There was China cracking down on mining. And it was kind of a really unique situation in terms of hash rate because Bitcoin price was going up and then hash rate was not going up. So Arnav, do you maybe want to talk about what are some of the other key factors that contributed to the BMN1 success? I think that was part of it. It was this really unique mining opportunity. And then also interestingly, we had kind of really low hash rate at the time. And now for the BMN2, I mean, I don't want to get too far ahead here, but for the BMN2, we've kind of got historic low hash price levels. So it's kind of another interesting situation. So Arnav, do you want to maybe talk a little bit about some of the reasons that you see why the BMN1 was a success?
I think it's an interesting product because let me go back a little bit, a few steps back, right? The historical origin of the BMN1 and how BMN1 came into play, right? Hashrate as an asset class can be issued as a securities. That was quite new, right? When we issued the BMN1. That was very novel, I would say, because in energy business, like in power purchase contract, can be used to borrow against it, right? You can have a power purchase contract from any government, and then you can borrow from the bank. In Bitcoin, the question was, why can't we do that? And then when I was discussing with the Blockstream team back in the days, and then became a very obvious, interesting point is Hashrate can be converted to a securities, and that's why Stocker becomes very relevant to the structure and bring it out on liquid as a securities. What made BMN1 very interesting is when a person bought the BMN1, they bought a fixed hash rate, right? And we had this interesting, let's go in details. So 2021, when this product was issued, the global hash rate was roughly around 100 exahash. Now we are sitting at 500 exahash. So it's like around 500, like 5x it increased. And when we issued the product, then at the same time, we had this Chinese mining ban. So the hash rate kind of dropped significantly. And I would say the first couple of months, the BMN mined crazy amount of Bitcoin because investor bought a fixed hash rate. And as the global hash rate went down, investors got an upside of the Chinese mining ban. So that black swan event that happened helped tremendously the BMN1. And this is actually a very interesting angle of BMN1 because BMN1 in that way, it's you wait for you give the time as preference, right? It's a 3 years contract in that way. BMN2 will be 4 years, but we'll come to details on that point later. In the BMN1 is a 3-year product. So in 3 years, you can expect there will be interesting moment where mining is profitable compared to buying, and sometimes mining outperforms buying, and it can be also outperforming just spot buying or a DCA buying. And there you made a lot of return. And Chinese mining ban was seriously one of that contending factor that resulted in a good return. So that I would say, but investors got this opportunity to fix the hash rate for a 3-year period. And based on whatever the global hash rate was, they expected whatever Bitcoin they get. And we kind of reach what we are expecting technically at the end of the maturity. So it's quite close. So that's, I would say, one of the critical factor of this product is, and I don't really remember, like, Jesse, when the product was also launched, you were also very much actively involved. And I don't remember that point of time in the market, there was any competitive product or any comparable product in that hash rate backed security space.
Yeah, I think there was other kind of hash rate contracts and that kind of stuff, but there was nothing that was, a security like the structure that you guys had put together at Stalker. I don't think there was anything comparable.
Exactly. And this is what, and another point is that point of time, there are a lot of these hosting contracts that people are trying to sell and everything, right? And the challenges over there is the family office or investors or like even high net worth investors want to buy those assets. They have to understand what is your energy cost, what is your, the equipment's uptime and all these kind of things. That requires a sophisticated understanding of the mining economics. Many of the investors do not have that. And this abstraction, what BMN did is actually, it said, okay, you buy a fixed hash rate. It's kind of what they did is upfront paid for all the cost, and whatever Bitcoin is mined, they get at maturity. So that created the instrument very simple for them. So they didn't have to care. Even, for example, like during this time frame, we have this Ukraine war, right? Energy price went up. But the BMN investors didn't have to go through all these energy contracts and understanding what is the energy price and everything, right? Because they bought a fixed priced product. And this simplification of the instrument made the product also very attractive. That's the reason we were selling third tranche, fourth tranche, fifth tranche, I would say within a matter of half an hour to 1 hour. Yeah. And that was interesting moment. So that, like, these are the two main stuffs. I think, Adam, maybe you have something. I see you've unmuted yourself.
Yes, somebody on the Telegram, Alex Hack had a question, which is, what was the, for Jonas or yourself, what was the weighted average Bitcoin basis return? Or some samples from different
Yes, we have
tranches?
a figure here. So we have to do some engineering here because not all investments came in Bitcoin. Around 61% actually came in USDT. So when we apply the average Bitcoin prices at which the investors bought that used Bitcoin, we have around 917 Bitcoin invested over a return of like a gross return of this 1,000 or net return of this 1,212, which arrives at 32% approximately return on Bitcoin. So net BMN1 produced 294 Bitcoin for investors.
Nice, thank you.
But this is of course again the overview. The average figure depends highly on the series in which the investors came in. Some made more and some made less.
Yeah, I mean, you can see in the tranches, I pasted it in the Telegram, that the Bitcoin tranche price, was posted in the history, was about 4.8 Bitcoin, then 7 Bitcoin, then 5.95, then 5, then 4.9, then 5.3, then 5.8, then 8.1 in the 8 tranches. Tranche 8 was almost exclusively Tether, but there was some Bitcoin in that. So apart from a small percentage of tranche 8, everybody made money in Bitcoin terms. And Jonas just gave the average about 32%, which is good.
Yeah, and again, it wasn't designed as a product that, it wasn't supposed to be a Bitcoin-based product, right? It was supposed to be US dollars and leveraging the price appreciation of Bitcoin and having lower volatility. So that's kind of, maybe not the focus, right?
Right. Yeah, but nevertheless, strong return in the Bitcoin.
Yeah, definitely.
Series 1.
Yeah, to outperform Bitcoin, right? Let's see here. I think another interesting thing, Arnab, you mentioned that, how did it differentiate itself versus other products? There were some Hashrate contracts out at the time. But I think one of the other unique things about the BMN was that there were secondary markets, right? And not just secondary markets on platforms like Bitfinex Securities or Digital or SideSwap, but people could also trade at peer-to-peer. And we had people trading at, within a whitelisted ecosystem, but people were trading at peer-to-peer on Telegram. What are the advantages and the importance there? Maybe direct this at either Constantino or James and Scott in terms of having secondary markets and liquidity.
I can comment on the involvement of Merge and Digital. So the presence of BMN1, the fractionalized version, which we distributed or listed on Merge, brought a lot of attention to digital securities in general and Merge in particular. But it was very liquid. There were periods where one side of the book was certainly heavier than others. When we saw the dip down to so after the run up to, was it 27, 28, and then the dip back down into the low 20s, we saw basically all of the asks get bought up. So I think once folks saw that the bottom was in Bitcoin, basically they just wiped out the book. And obviously that filled back in later, but it was nice to see that folks were really interested in using this as another way of getting exposure to Bitcoin, and that was also at historically low BMN1 prices, and that was fractionalized, 100,000 to 1, so you could get it for generally traded for, I guess, actually between $4 and $4 and down to a little under $2. So,
Scott, anything to add on that?
Well, the secondary markets came about via SideSwap, I think, originally. So I think we were the first ones who managed to offer secondary trading outside of the OTC space. And I think the OTC space had a few incidents where the delivery versus payment failed, or where I think sellers got scammed initially because of the difficulty in facilitating who goes first in terms of payment or transfer of securities. So when we added the swap tool so that people could swap directly between themselves directly from the wallet, the incident rate of those went down to 0, and then secondary markets started trading in the. I think SideSwap was probably the most liquid market for the BMN product, where it continuously had depth on both the bid and ask, and there's plenty of bids willing to pay Bitcoin to buy the mining node to effectively carry the Bitcoin until maturity and try and plan out the return that was available. I think we listed the product about, let me check the chart, in, what was it, 2022. And it's been trading there since, and we very much look forward to the BMN2 being listed as well.
So Arnab or Jonas, there was also a number in your report about the estimated secondary volume on SideSwap and other platforms. It's higher than I was thinking.
Yes, exactly. Because in the end, people were also able to just trade BMN1 peer-to-peer at undisclosed prices, right? So not everything is captured in some API data one can get. And yeah, we have an estimate that around 37 BMN1 have been traded in the last few years, which comes around at a 18.3 million euros a check mark if we apply the accounting value per BMN1. And this doesn't include any premiums at which investors probably have bought, have sold BMN1 at that time.
Oh, that's interesting. Yeah, that's an interesting stat. I didn't realize that. Yeah, that's pretty cool. I mean, another thing too is it's a product that you wouldn't actually expect to trade too much because a lot of it was bought by Bitcoiners with Bitcoin on the the thesis that they want more Bitcoin. So this was like the diamond hands of the diamond hands. So I think there wasn't a lot of I guess there wasn't a lot of selling. I think there was a lot of people wanting to buy, but I think that number kind of surprised me. I didn't realize that there was that much traded.
I think
Go ahead. Yeah, I mean, I just think that's quite a large overall volume compared to the total capital raise, because I think it was in the sort of 40 to 50 million range on the raise. So, of course, some of it probably changed hands multiple times, but that's probably over 40% traded hands during the life cycle, right?
Yeah, that's a really interesting
I think
stat.
also consider the fact like the BMN was much more speculative in terms of its price discovery in the beginning of the term, because that was a time when you're expecting how much Bitcoin will be like you will get at maturity. As we got closer to the maturity, people kind of got understanding how much BTC they're effectively getting. So this product effectively became less tradable as we reach close to the maturity, unless there is some significant requirement of liquidity for certain investors, right? And when we launched the product, the trading venues were not that much live, right? SideSwap, I think, was the first one to come in. And when we had this man-in-middle attack that he was mentioning, Scott, then I think subsequently we had Merge and Bitfinex Securities, but that came quite later during the life cycle. So had that been before, from the day one, the secondary markets, I think the volume would have been significantly different.
That's interesting. And what about in terms of, I mentioned at the beginning that I thought that the BMN was kind of a pioneering product in the STO industry. What have you seen since over the years, Arnab and Scott and James, in terms of, the BMN kickstarting this industry and then other assets following, especially on Liquid? I think, Liquid has seen a lot more interest since the BMN was launched as well. I mean, maybe I'll start. I mean, with our own pipeline on Bitfinex Securities, I mean, we see, that we basically our whole pipeline to date and what we have in the future is being done on Liquid. And the BMN, I think we see it as a really interesting proof of concept. Like I mentioned at the beginning, is it was the first security token to really, I think, issue a decent size, of close to $50 million, and to have 8 successful tranches, and then to, to be properly tokenized so that people could do things like have this really active OTC market on Telegram a security with an ISIN. I think that's massively unique. And I think that proof of concept kind of paved the way for everything that came after that. And, I think give a lot of investors and issuers confidence to go ahead and invest and to do these kind of similar issuances. Any additional thoughts, Arnab or Scott or James?
Hey everyone. We really like what's being developed here in the Liquid ecosystem with the whole structure of how capital markets can change, basing everything on blockchains where assets are held in the name of the actual asset owner, where you don't need to go through any intermediaries to actually hold and trade the securities, so that you can have full title in your own name and be able to trade and transfer them without relying on middlemen, and having immediate access to capital markets without having to go through a very heavy listing process, etc. And we're super excited about BMN trailblazing all of this together with AMP and everything else that Blockstream's built, and building on this. And what we're seeing is lots more issuances coming into the space. People are integrating with us so that they have access to our swap markets, which we really like seeing. We ourselves, SideSwap, we issued our own equity on the Liquid network, where it's available and traded. It's not super heavily traded, but I think it's the first actual equity being issued on a blockchain.
Yeah, I think so. Yeah, that's very cool.
Yeah, and what's really nice about it is when you, as an issuer, issue on Liquid, you can actually select which exchanges you want to go to, or have multiple exchanges if you want to create a custodial solution where you have deep liquidity, such as Merge or Bitfinex Securities, or if you're so inclined and comfortable holding the assets yourselves and managing the keys, you can actually trade them peer-to-peer and swaps over SideSwap. So the whole capital market structure becomes very, very flexible, as well as having very cheap and easy access to issuance tools. And what's also great about it is the ability to do the dividend distributions or payout distributions based on the AMP ID with the permissioned assets. I think, well, maybe Arnav can correct me, but I think that's how the distribution of the returns for the BMN will be done. Arnab?
Yeah, yes, the entire payout will happen on Liquid Bitcoin, right? So we have started the process for paying out today. So already people have started requesting for the redemption. The first set of payout will happen from tomorrow onwards, and this will be happening on the AMP ID. So just for information, anybody who is holding the BMN, they're holding on the Liquid wallets. And the Liquid wallet have a specific AMP ID that is kind of an identifier, right? And this identifier is connected on Stockr, so that's how we whitelist it, so people can identify, or any issuer can identify who are holding the securities at any given point of time. That means issuer knows who are holding the token, and the swap will happen in such a way that they will issue they will send their BMN1 back, and that will be treated as a redemption event. Once that happens, we will trigger the payout in LBTC. And this is all automatized because we can calculate how many pro rata BTC or LBTC has to be paid out. And that's very interesting, because if you do it a traditional way, this kind of in back office calculations, everything, you take quite a lot of time. We close the majority of our time that we required to close the accounting was actually the back office accounting, right? All the FX calculations, BTC, USD in the last 3 years and all the stuffs. But at the end of the admin process of paying out is just a matter of a few minutes. And that can save a tremendous amount of cost and process optimization. That's the angle of the tokenization. It can be interesting. But I think one thing, like Jesse, as you mentioned, is what is the unique angle for this product? Also, I would say it's also an ecosystem product, right, in that way. Because this product, so many players of the Liquid ecosystem has been participating in to make it a success, right? And this is a very fantastic product. On the one angle, is an ecosystem product, but other aspect is it's one of this kind of the Bitcoin derivatives, a structured product the market is not having at the moment. When we are talking about institutionalization of Bitcoin or institutions coming in Bitcoin, we will see the obvious scope moving to structured products and derivatives and likes of them. And the hash rate backed securities is one such product, right? And having it on liquid, natively you can purchase with liquid Tether or with liquid Bitcoin or Bitcoin, and then you can do swaps. That creates a complete different angle of capital markets that was not before.
All right, let's talk a bit about BMN2. I see that BMN2 was just announced. Adam or Arnab or James, do you want to give a quick overview to BMN2 and how it's different than BMN1?
Yeah, I can take a start and other people can jump in. So one thing that's emerged since in the market in general since BMN1 was launched 4 years ago is the evolution of this new metric called the hash price. And I posted a link to the graph you can look at in the Telegram channel. I think it's also in the materials, but basically it's the dollar amount of the Bitcoin 1 petahash mines per day. And you can see on the 5-year chart that it's, it's currently pretty low. It's like, 55, 60, something in that range, dollars per petahash day mined. And in a bull market, it went over 400, but, it spent, large amount of time over 100, good periods of time over 200 or 300. So, and the other thing to understand is the hash rate contracts, and James has some experience in that market. What people will do if they sell you a 2-week hash rate contract is they'll just take the daily hash price and multiply it by 14 days, and they'll charge you about that because they won't want to sell. In the short term, the amount of Bitcoin you mine is fairly predictable because there's not much difficulty adjustment in a short period of time. And then for the longer hash rate contracts, they will, multiply the days. Let's say it's a 3-month or a 6-month. They'll multiply it by 90 days or 180 days, the current hash price, and then apply a little bit of discount or premium depending on what people think is happening with the Bitcoin price and the hash rate.
But to note, Adam, is the hash rate contracts are really only 6 months on average. Rarely,
right? That's the maximum. Yeah.
Yeah. Whereas BMN2 is going to be locked into 4 years. I don't think there's really anything like BMN2. Yeah.
So it's a new model for valuing hash rate contracts, and the BMN2 is a kind of leap version, like a 4-year version, when the market, these contracts are generally custom negotiated and are, typically 3 months or less or 6 months at the outside. So, but it's an interesting price indicator because they're basically taking the daily petahash price and multiply it by the duration. So from that, you can see there's quite a significant dollar basis upside if there was a way to arbitrage those markets, that you could sell a hash rate contract and buy a BMN, that this could pull the dollar basis return of BMN up a lot if you look at it in this kind of model, which was absent from the market comprehension back in 2021 when BMN1 launched. So this hash price index, new concept. It's quite nice because it simplifies things. It takes out of the picture the efficiency of the miner, the operating costs, electricity costs, etc. It's just how much does it mine per day in dollars. And BMN2 is 1 petahash, so it coincidentally aligns with the reference for the hash prices at petahash. So that's that. So the other things that are different about the BMN2, so 4 years instead of 3 years.
What's the thinking behind that, Adam? Why did you stretch it out a little bit longer?
Just to get it through to the next halving and give it a full experience. And, I think generally our view was in creating BMN1, and we want to keep that going here, is, we did well when we did the prop mining at Blockstream that had the characteristics I mentioned a bit earlier. And in part, that was because we don't like selling Bitcoin, so we kept it all. So we paid for the power bills with, US dollars on the balance sheet. And that seems to be key to getting a successful return, to getting the best out of mining. Because what a lot of people will do is they've got $100,000 to invest, they'll buy $100,000 worth of miners, and then they have the idea that they'll sell Bitcoin to pay the power bills. And of course that works in a bull market, but in a bear market, it's kind of miserable because, they'll be selling a very large proportion of the Bitcoin they're mining to pay the power bills in the bear market. So, and yet that's really where you pick up extra Bitcoin because the hash rate will fall, right?
Yeah.
So our observation is, look, you're better off to, spend $30,000-$40,000 on the miners and the remainder set it aside to pay the power. You will actually make a better return generally doing that. And that was our backtesting experience. So that's what we've done again here is that, you've got a bundled price, which, effectively gives you the hash rate. And internally then, we're buying miners. We're actually buying a few extra miners because of that 10% equipment failure assurance and, ensuring that you're not affected by, equipment failures or hosting contracts that are mismatched duration, and ultimately that you're not selling Bitcoin during the term of the product, because we think you'll get the best return by holding it to maturity. And then if you want liquidity, well, you can just sell the units in these secondary markets that were mentioned on Merge, Bitfinex, Securities, and SideSwap that we've heard from people from those companies during this call.
Yeah, so the forced hodl concept is really important to the success as well.
Yeah, so it doesn't pay out a dividend, it rolls up the Bitcoin inside it generally. And that was because we thought, well, if people are selling the Bitcoin, they'll probably regret it during the 3 or 4 month period, right? Now, if you actually need the liquidity, you've got a different way to do it, right? Which is you sell the BMN, or, you sell some other Bitcoin you have, which corresponds to the BMN, the Bitcoin accrued inside the BMN units. That's another way to go. Because that on maturity, it pays those out.
And Arnab, go ahead.
So, Jesse, if you think about the entry point for BMN2, which is 61.64, it's not that much of a premium over current spot price, hash price. Right? I think the last I checked with Luxor, they're sitting just shy of $54 at current spot. So you think of it, if there's another bull run on Bitcoin, BTC price, it's gonna exceed the 61, 64 pretty easily. And you got to worry about if there is a bull run on the Bitcoin price. What's going to happen? You're going to see the hosting providers out there looking to charge higher hosting rates. So when that happens, it's going to diminish some of the profitability that people are mining direct. But with the BMN2 note, you were locked in for 4 years. That's a significant difference than just doing mining on your own.
Yeah, definitely.
If you look at the graph I posted in Telegram, and I think it's in the materials, looking at the hash price, it looks like, it's been over the $61 a day per pet hash for like, I don't know, high 90s, like 95, 97% of the 5-year history of the hash price index. So it's a good entry price. Like 61 is a very good entry price if you look at that market historically.
That's the same chart that you have on the BMN2 page on Blockstream as well, is that right?
Yeah, that's the one, yeah.
Yeah, that's a good one.
Sorry to jump in. There's another risk factor that starting to be a play in the industry is the AI world is starting to compete with the energy, really. So locking in for 4 years now before AI takes off, well, they've already taken off before it consumes a lot more, just going to create a much more competitive environment from an energy consumption perspective.
Yeah, I mean, actually, keying off that, it's a very good point, James. So Arnab mentioned earlier a kind of bonus that BMN1 users experience, which is coincidentally pretty shortly after it launched in July 21, there was the China mining ban, and the hash rate really dropped for it took 6 months to recover. And during that period, anybody who was actively mining got, mined more Bitcoins than they expected. Now, at this point in the cycle, I think there may be some new factors that could arise. Now, it's hard to predict these things, but effectively, one is what James mentioned: is there's a new aggressive buyer of power infrastructure, and that is the AI workload, which I believe is already using more power than the entire Bitcoin network. And the other point is that those companies are buying they're buying foundry capacity to build the the GPUs and AI workload chips. So there are periods in Bitcoin's history where mining has benefited from a shortage of ASICs, a shortage of mining machines. And so with this new and very large AI demand, it could create a situation where there's once again a pretty strong shortage of miners, which means that anybody who is mining, gets a higher profit margin for a longer period of time on their mining, because there's economic interest to buy them, but the manufacturers can't get enough wafers from the foundries. And then the second factor is, again, the AI people, they're buying up, because of the amount of power they're using, they're buying up, data centers and power allocation from power generators. So there could be another factor that even if there are ASICs, it might be difficult to get it harder than it would be otherwise to get miners online, for the people that provide the hosting, to secure enough power to host it. So, whoever's mining through those kinds of events tends to pick up a bonus in a similar way that, the China mining ban created a temporary version of that.
Yeah, it's interesting. It's like owning Bitcoin, right? Like you just need to have some participation. I think famously Bitcoin has its best price performance like a couple of weeks every couple of years, and you just need to be there for those couple of weeks. That sounds like mining is the same, as you just need to have some kind of exposure to it. And it's interesting what you're saying is they're getting pinched on both sides, on both the semiconductor side and the energy side. This question's a little bit off topic, but do you think that pushes hash rate outside of North America at all? Because I imagine that demand would probably be from the AI side for power would be strongest in North America. Do you think we'll see more hash rate kind of looking to other places, or is that process already underway?
It may, because basically the other factor is the AI workloads, they're not as price sensitive, so they'll pay more, like bid you out of the market if you're mining. So basically Bitcoin hosting companies and prop miners will go searching for where the cheap power is, and that might be further afield. So you could just simply get outbid on the power. They could pay more for the power, and the reason is that the AI chips and the GPUs are a lot more expensive per megawatt. So whatever their business model is to make money from AI, and clearly they do, it's the power is a smaller factor. Like the machines cost a lot more, so they don't care as much about the power cost. Where Bitcoin really cares about the power cost and will go find the cheapest power internationally.
Super interesting. So the BMN2 was announced today. I see it's up on the Blockstream website. Arnab, did the primary offering already start on Stalker, or when does that start? And what should investors know about that primary offering?
So the primary offering started today already at 12 p.m. CET. So you can actually head on to Stalker platform and check the offering. This time it's interesting also because people who are already holding BMN1, they can roll over to BMN2. That means they will be effectively investing with BMN1 in that case. And they can invest with Tether, with BTC, as well as with Euro and USD. The price this time is 1 BMN, as James and Adam mentioned. It's 1 petahash this time compared to last time it was 2 petahash. The price, it is 90,000 USD. So 1 BMN2 is priced at 90,000 USD. Minimum investment for people over here for this product is 115,000 USD. If you are a professional qualified investors, and we can do professional qualification through our partners, you can invest as low as 10,000 USD. That makes it a little bit more accessible than the last time when BMN1
a little bit
was priced.
It makes it much more accessible.
And
it's 200K, yes. Yeah.
And so the minimum token size is smaller as well, right, Arnab? And we should also mention that on Bitfinex Securities and Merge, there are different. So there's like a primary and a secondary, and some of these markets have different amounts and different markets they support.
Yeah.
Yes, the BMN1 was divisible up to 2 decimal points, and now BMN2 will be divisible up to 4 decimal points. So it makes it more interesting in terms of decimal rounding up and all this kind of things.
So that's the minimum
because we had those
transferable units.
Yeah.
So in terms of like if we're doing OTC trades, then it's 4 decimal places now, not 2.
Exactly.
That's really interesting.
The offering is at the moment still is not open for US investors for regulatory reasons. We are looking for the right avenue for that and talking to the right partners, but we cannot comment anything on that at the moment. The offering is open, so we have a full list of all the countries for which the offering is closed. If you head to stocker.io, and we can send the link over here in this notes of the space, and you can head and you can understand from which countries you can invest at the moment and what are the qualifications. So that way you can participate in the primary offering. So the right now initial.
Yeah, I was sorry to interject. I was going to translate the 100 fractions on BMN1 at maturity and the current Bitcoin price. That's around a minimum unit of $5,000 that you could trade at OTC or on SideSwap, and with BMN2 being divisible up to 10,000 fractions, that is about $50. I mean, maybe less, right? Because the BMN1 is 1 petahash. Oh, sorry, BMN2 is 1 petahash, BMN1 1 petahash. So, I guess 90,000 divided by, so about $9 per minimum unit. And, on Bitfinex Securities and Merge, they have a smaller fraction tick sizes on an internal market.
All right. Yeah, that sounds like that's much more approachable than the BMN1. That's great. That's a massive improvement, I think.
Well, it allows more people to enter the market, right? And if you think about it, like even the competition, if you go like a Compass, even to buy one machine and start hashing one machine is quite a bit of money. In this case here, you're mining at a fraction of that.
Yeah, that's great because it really, I think part of the original value proposition, as Adam mentioned, was decentralizing mining a little bit, right? Letting more Bitcoiners, just normal plebs, get involved in Bitcoin mining. And I think that definitely is a step in the right direction. It'll be appreciated by people. That was definitely in 2021. That was one of the biggest feedbacks we got was, number one, when are you going to let US investors in? And number two, when are you going to get the minimum ticket size down? So it's good that you've made progress with at least one of those, Arnav.
Yeah.
Yes.
I mean, did somebody from Merge or Digital or Bitfinex want to talk about the tick sizes there? Because it was a different earlier. At least for BMN1, it was smaller, right?
Yeah.
Yeah, I mean, I can. I mentioned earlier that we had issued BMN1 as a 100,000 to 1 division of the initial BMN offering. So that was divisible down to the 6 decimal places, and with the most of the time on Merge, it traded as a result between just under $2 and just over $4. So it was, and actually most of the purchases happened in the $2 to $3 range. So we saw a significant interest there. And we're definitely interested in issuing BMN2 as well. So we'll be interested to figure out the logistics of that. But yeah, it's a wonderful method, and we see the fractionalizing of any security as one of the major value propositions of Liquid. So figuring out ways to get it into the hands of more folks is definitely the primary interest for us as well. That's fantastic, and great to see that it's going to be the BMN2 is going to be issued at 4 decimal places.
Yeah, definitely. So I think we're coming up on time here. So maybe to wrap it up, what is everybody's outlook for the next maybe 12 to 24 months in terms of security tokenization and then a broader Liquid adoption as well? Does anybody have any thoughts they'd like to share on that?
Maybe I can start quickly on this. So BMN1, I would say the entire real world asset tokenization space has given one of the interesting and attractive return, right, in that way, right, for the BMN1. That roughly, if you see that translates to amount, the Bitcoin that we are paying out today, for the BMN1 is 1,242 Bitcoin, roughly translates to 78 million in USD as of today's Bitcoin price. And if you see, it's kind of around 2x return compared to the amount of money that has been raised. There's a 2x return approx in 3 years period. So it's a fantastic product in terms of return perspective, right? And if you see the RWA space or inter-asset tokenization space, the initial demand is coming actually from the digital asset space who are accessing or looking for different assets. That's the reason entire T-bill tokenized products blew up, right, heavily. Whereas in the BMN is actually coming and addressing to the Bitcoin audience specifically, and that demand side is more derivatives, more structured products, right? So I think there is a huge room to grow. And with 2024 being the year of Bitcoin ETFs and all this thing, I think it's a fantastic year to do the rollover and bring in such an instrument in much more bigger audience and at much more bigger scale. Also, I see there's a huge opportunity for this product to create an ecosystem kind of product, because this is a product that is natively started on Liquid, and a lot of Liquid partners and players are kind of working together to make this a reality and also to make it accessible to a lot of players, right? And this is, I think, one of the fantastic product and one of the fantastic case study for me and key things to learn from this.
Yeah, one thing we've heard from some rollover investors and also during the lifetime of BMN1 is a strong interest to be able to use BMN itself as collateral, so that people can, because it generally has a lower volatility of its kind of market price as reflected on these markets than, and evidently like reasonable liquidity given the amount that traded during the duration. To use that as collateral, because then it becomes a US dollar basis investment to somebody who, is mostly all invested in Bitcoin, which is, commonly the case with Bitcoiners, and also why, to our surprise, BMN1 was almost all, well, not almost all, but like significantly invested in Bitcoin terms, where we were anticipating a US dollar investment. So it's a way to convert a kind of Bitcoin basis investment into a US dollar basis investment by using the thing you're buying as extra collateral, basically. So that's something that there's appetite to. Now, there's not currently, necessarily ready markets for that, but they may evolve to use it as collateral. And I think some buyers are doing that manually. They're borrowing against Bitcoin partly to fund a rollover, for example, which is an interesting strategy.
Yeah, that's definitely something that we're working on as well. James or Scott, do you have anything to add in terms of where you see?
Also, I think like one thing which I want to mention, Jesse, recently, I think a few weeks back, BMN1 was also rated.
Still there, Arnab?
Developments that happened with BMN1.
Sorry, restate that, Arnab. You cut out for a second.
Yeah, missed that.
A few weeks back, actually.
We lost you there for a minute, Arnab.
Again. Maybe Tobias, or Jonas, if you know the point he's raising, you could say it.
Yeah, Arnab, you were breaking up. I think Arnab wanted to refer to some rating we got for BMN1. So we mingled with a German rating, digital asset rating service provider, which is called Particular, and they did an extensive rating of BMN1 across some criteria of their platform. And BMN1 was rated quite good, got a triple B rating, which is good quality, medium risk. And we're looking forward to also get this rating, of course, for BMN2 to really signal the market that this is a great product with some investor protection. And this is, a good way to invest in Bitcoin mining returns.
Very good. James or Scott, any closing thoughts?
We're just super excited about building the capital markets around Bitcoin and developing the same type of infrastructure and accessibility that Bitcoin offers, as well as in the security space. And I think Liquid is the only viable option right now within the blockchain space. and more issuers as well as securities are coming to the space within the coming year, and we very much look forward to it.
Yeah, I would echo that. I think we're seeing more and more. Go ahead, James.
I would say something very similar. I mean, we operate in the regulated and permission space. So obviously we're doing a lot of we're having a lot of conversations with folks, bringing securities, bonds, everything else to the market. And the case for liquid is getting better and better, and we look forward to having after BMN1's success, BMN2 coming, all of the other exciting products. I mean, our entire value proposition is connecting the global retail investor with the best products, and they're all coming to liquid. So we're just really excited to continue building on liquid, integrating more deeply with it, bringing it to all of our partners to solve the real problems that come with getting to Bitcoin capital markets at scale. So this is it's going to be exciting.
Yeah, I was going to say much of the same thing. I think at Bitfinex Securities we're seeing kind of the same thing, and I guess that's kind of you get a bit of a tailwind with a bull market, and we're seeing more issuers reaching out. We're seeing more investors looking at security tokens. And I think interestingly, they're coming both from the crypto world, where they're looking to take some volatility out of their portfolio. And then I think also from the traditional world, where they're looking for a way to get access to really unique opportunities. And I think certainly the BMN is probably one of those. And then, outside of that, I think, for the reducing volatility kind of part of it is that, just this month, we announced that we're doing this ongoing bond issuance program with Micro Capital, where they issue bonds, conventional bonds. They're a very seasoned conventional issuer. They issue conventional bonds every month. And going forward, we're going to be doing the tokenized part every month. So I think we'll see more of that kind of stuff build out, and there'll be more options for people and more products and more investors. And also it's kind of interesting, in 2021, I think this was still like a very niche idea. But, you flash forward to 2024, we've seen a lot of securitization efforts for Bitcoin, and the Bitcoin ETF being so massively successful. Is that I think what our view, like collectively on this call, was in 2021, that the kind of the consensus view with the Larry Flinks and the BlackRocks and these kind of people, that it's kind of caught up a lot. So I think the trend is pretty well established, and I think we'll see more products and more investors over the next couple of quarters and years.
Yeah, I mean, it's interesting. I think there are, with the BMN1, there were some funds and larger entities in there, but there's also a lot of, regular users. And I think that at the time BMN1 was launched, it was kind of an exotic instrument, right?
Yes.
Whereas now, I believe the fund managers of like Bitcoin-related funds that are doing alpha strategies have become a lot more sophisticated in their understanding of mining the hash price model, which gives a way to value and look at the history of a potential resale value of a BMN token is new. And so the institutions are looking at it in more interesting ways, like, borrowing, if they have a fund and they have Bitcoin in it, borrowing against a fund to an allocation and buying BMN2 is an interesting strategy. And a wider group of people now, have researched and learned about and priced and understood mining over the last few years. So there's more institutional appetite. It's become less exotic, a little closer to mainstream. And of course, the real world asset space has become a hot topic, which, I think we were very early to with BMN1 at the time.
Definitely. Well, thank you everyone for your time today. I think this is a really informative and a fun conversation, and looking forward to learning more about the BMN2 and seeing how that does as well. So thanks for the time today.
Thank you.
Thanks, everybody.
Thank you.
Thank you, bye-bye.